What's going on, y'all? Welcome to another episode of the Friday Wrap Up with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And it is Friday, and we made it. Another week down as we are coming closer to the end of March. It's amazing to think that Q1 is already going to be behind us. Wild. That is crazy to me how fast this year is already going. All right, so in the Friday Wrap Up, I, within hopefully 5 minutes, like to bring us up to speed of everything that happened this week. So whether we're out talking to clients at open houses, we're driving clients around, we get a call over the weekend, whatever the case may be, run into somebody at a department store, the grocery store, maybe HEB. I love that place. Actually, I have to go there today and I'm super pumped. But whatever the case may be, just a good synopsis of what happened so we can all be on the same page, right? Because I think it's always critical for all of us professionals to kind of almost be on the same page so that what it does is it reduces uncertainty for potential buyers and sellers. It's just been my experience for a long time now, well over 20 years in the space. So that's why I like to do it. So let's kind of dive in really quickly. What happened? And the biggest news this past week was obviously the Fed. The Fed spoke on Wednesday, the highly anticipated meeting that the Fed always has. Now, it wasn't highly anticipated because people were expecting a Fed funds rate cut. We weren't going to get one. Everyone knew it. The big news was, what were they going to change in their vernacular? What were they going to say? And then the other one was, it's the first dot plot of the year. If you recall, we get 4 of these, and what it is, my coffee. Hold on. It's so good. It's so good. What the dot plot does is it gives a projection of where every Fed member believes interest rates are going to be for the remainder of this year and bleeding in possibly to next. So it's a great indication of, okay, our traders are going to look at it and say, are we on track? Remember, they're forward thinking. Are we on track? Does the Fed still see what we see? We're hoping for for rate cuts. Are they projecting rate cuts? And what we got was the following. The Fed came out and basically said 2 things that were really important. Number one, they still expect 2 cuts this year. I believe we're not going to see that till late Q2 I think the first one's probably going to be in Q3. If you recall, just like last year in September, I think we're going to be right around that time frame. I do. I think that's what it is. And I think that's a 50-50 shot, in my opinion. The other thing they changed was they are as uncertain as the rest of us regarding the economy. With tariffs, with the debt ceiling, with all the changes that Doge is doing, they remain highly uncertain as well. So, puts us all in the same boat. But those are the 2 biggest things. The other thing I noticed, and just kind of looking back, the month of March has really been a sideways movement for interest rates. We've gone from maybe like the low 4.3% on the 10-year Treasury to just below 4.2. We closed the week, I think, at 4.254. We're just in this little steady groove right now. The biggest thing with that is just make sure you're working with a good professional so you can lock those valleys, lock those lows, right? Because those little ticks can be an 1/8 or a 1/4 point to you. The housing market for all of us in the real estate space, this is big news, I think, especially for us. It's not going to make big national news, and it's not something that really drove changes to the market and interest rates, but it's big for us. Permits were up. Right? Remember last month this was all down, negative, big negatives. Permits were up, housing starts were up, existing home sales were up. A huge U-turn. And a lot of that has to be attributed to these lower rates that are moving sideways, and it at least is creating a little bit of certainty of, hey, rates aren't so bad. I know my payment. I looked at it 2 weeks ago. It's still the same now, 2 weeks from now. Okay, I'm ready to pull the trigger and buy that house. And that's what we're seeing. What else did I write down here? Housing start. And then the other big news wasn't huge, didn't really move the market a ton, but retail sales, the overall number came in lower, but the core component, you take out autos, energy, big ticket items, that actually went up. showing the consumer really hasn't gone too far. They kind of digested, they're taking some bullets of this uncertainty, and they're bouncing back rather quickly. Lastly, don't forget those buy downs in any of your negotiations. Speaking with agents this week, telling all of them, get as much in seller concessions as you can, whether it's buy downs, buy down the rate directly, whatever the case may be. You can use that money, or if necessary, just go back to the seller and reduce the purchase price if you're not going to use it all. And to note, buy downs right now, depending on which one you get into, your client's going to be looking in the 3% range to 4% range. And again, I stress this. This is not a show to tell you exactly what interest rates are. I'm giving you a broad stroke. Everybody's situation is different, from credit to assets to history. You're going to have to make an application with a mortgage lender to know exactly what your situation would be. So with that, I hope you all have a great weekend. If you need anything, a flyer, pre-approval, whatever it may be, please don't hesitate to give me a call. And lastly, a plug, please go on YouTube and give a subscription to The Mortgage Mouth. It'd be greatly appreciated. Every day I'm dropping the daily dose, a quick 2 minutes of what happened in the marketplace. I'm bringing you this Friday wrap up. I bring you my weekly market update on Mondays, and I'm gonna start bringing you more tutorial stuff. All right, y'all, have a great one. Really appreciate you tuning in. Cheers.